Today's topic is bank reconciliation statement. Bank reconciliation statement. When an individual or a firm deposits money or withdraws money from the bank or into the bank, okay, uh, the cashier of the company, records his transactions, his dealings with the bank in a book called cash book. Which book? Triple column cash book. Here, as long as we talk about bank reconciliation statement, please understand that we're talking about triple column cash book. We're talking about triple column cash book. Okay. So what are the headings of these three columns? One bank column, one cash column, one discount column. These are the headings. Okay, so every time the cashier of the company deposits money, he enters in this cash book that he is maintaining. Every time he withdraws money from the bank, and that money or cash from the bank comes into the company, at that time also he records the movement of the cash, right? So it is done by the firm, it is done by an individual also. Similarly, just as you as an individual or you as a company recording these transactions, these deposits and withdrawals in your cash book, the bank also records the withdrawals and the deposits. Okay, the record that bank maintains is known as passbook, PASS, passbook. Okay, and a copy of that passbook is what is your statement. A copy of that book is given to you. Okay, a copy of that book is given to you, that we are calling it as statement. What state? Bank statement. This is bank statement. Union Bank of India, New Alipur. Okay, account number so and so, name Sabina, saving bank account, passbook. So this is how your statement looks. Actually, this is a bank statement. Okay, saving bank account statement, you can say. What is this? This is the copy of the passbook. This is a true copy of the passbook, which is maintained by your banker. Sometimes you get the passbook also. Some banks give statement, some banks give passbook. Okay, whatever passbook that you get also is just the true copy of the book that is maintained by the banker. Okay, now look at this. For an example, there's an opening balance of 14,000 and you have withdrawn 2,000. The balance on 22nd is 12,000. Again you have withdrawn 11,500 and leftover balance is 578. Again there's a deposit of 1,000. 1578 is the balance. Okay, and a withdrawal of 700. 878 is the balance, and there is a deposit of 1,000. 1878 is the balance, and there is a withdrawal of 600, and there's a balance of 1278. This is how a bank statement looks like. Okay, bank statement looks like. So why am I saying this? Why am I telling you about the passbook and a cash book? Now, very often we come across that there are differences in the passbook, this bank statement, which is a true copy of the passbook. There's a difference between this book and the book that we are maintaining. Now, recollect back the three column cash book, guys. We were recording our cash transactions, our bank transactions in a three column cash book. So please recollect, okay, retrieve back from your minds the three column cash book. The three column cash book is called three column because it has three amount columns. What are they? There's an amount column for bank, there's an amount column for cash, and there's an amount column for discount. The cash and bank columns are balanced, whereas the discount columns are not balanced. The discount columns are just taken totals on both debit and credit sides, whereas the cash column is balanced. The bank column also is balance, and the closing balance of bank and cash are, arrived at. Fine. So when we are talking about cash book, we are talking about this cash book of 3 columns, right? So the cash book is in the company, the passbook is in the bank. Please remember this. The cash book is in the company, the passbook is in the bank. The copy of the passbook is your bank statement. Whenever you get doubt, you go and get that passbook copy or statement. Okay. Now, when these two books are maintained by two different people, the bank cashier maintains passbook, the company's cashier maintains cash book. These two different people are maintaining two different books for the transactions deposited or withdrawals. Because it is maintained by two people and two different entries are made, okay, for the same transactions, there is a possibility that these two books do not agree very often. Sometimes the cash book may show more balance than the passbook. Sometimes the passbook may be showing more balance than the cash book. So there are differences between the cash book maintained by the cashier of the company and the passbook maintained by the banker. Okay, what are the reasons? Because there is a difference, what are the reasons we will discuss? Because there is a difference, you need to reconcile these two books, cash book and passbook. Okay, to reconcile, you make a statement. You make a statement form, and that statement is known as bank reconciliation statement. Bank reconciliation statement. Okay, BRS, bank reconciliation statement. Okay, now a statement which is prepared to reconcile the causes of differences between the bank balance as per cash book and the bank balance as per passbook. Now look at this one. Bank balance as per cash book, bank balance as per passbook. In simple words, we can say balance as per cash book, balance as per passbook. Balance means it is bank balance only. Balance means it is bank balance only. Okay, right. What are the features of this bank reconciliation statement? Actually, it is just a statement. You just take particulars and there's an inner column, there's an outer column. That's it. There are 3 columns. We'll just look into that when we are working out problems. So it's a statement. And it is not part of the accounting process. You don't deal with the debit and credit in this chapter. Okay, till now you are confused with the debit and credit. Now maybe for 2-3 classes we will not be using debit and credit. Okay, debit that, debit credit this, will not be using, but it is a statement. Okay, so therefore accounting process is not carried on here. It is prepared to reconcile the causes, the reasons for differences between cash and bank balances, cash book and bank book, bank balances. Okay, and it can be prepared at any time, not necessarily at the end of the period. At the end of the accounting period. Okay, it can be prepared anytime. Whenever they want to reconcile, they can reconcile. Okay, whenever they need, they require, they will reconcile. Okay, and since it is prepared on a particular date, and the heading that you had to give is bank reconciliation statement. Bank reconciliation statement on so and so date, on whichever date you're preparing. Okay, on whichever date you're preparing. For example, if Rohit is preparing, okay, and bank reconciliation statement of Rohit on so and so, on so and so. Okay, that is how you have to prepare. That should be the heading. Now, yeah, what are the reasons for differences between cash book and passbook? What are the differences? Reasons for differences. What are the differences? Why the differences? Let's understand that there are basically 2 types of differences. Number 1 is items appear in cash book, but they do not appear in passbook. Number 2 is items appear in passbook, but they do not appear in cash book. One is they appear in cash book and don't appear in passbook. The second one is they appear in passbook, but they don't appear in cash book. Okay. Now let us understand these things. A. Now we'll just look into A. Items not appearing in bank passbook. Bank passbook. Look at this one. Look at this. Number one, checks issued but not presented. But not presented. Checks issued but not presented. Okay. Checks issued by the business entity, not debited by the bank. This is what given here, but it is checks issued but not presented. Checks issued but not presented. Look at this one. Checks issued but not presented. Okay. Now read it. I want Vinita read. Number one. Vinita, read it, ma. Damini, read it. Damini?
Yes, sir.
Read it.
Checks issued by business entity not debited by the bank. This may be because they might not have been banked by the payee, or it may still be under clearance. The entry in cash book will be immediately when the check is issued, thereby reducing the bank balance in the books of the entity's books of accounts. Here, bank balance as per cash book will be less, but as per bank passbook it will be more. This is also termed as unpresented checks.
Yeah. Checks issued but not presented. You know, when you are issuing check to anybody to whom you have to pay money, okay, what will you do? As soon as you give the check, you will reduce that amount. Let's say the balance in the bank, okay, is 10,000. When you issue check for 5,000, to that extent, you will reduce as a cashier of the company. Okay. The 10,000 minus 5,000 will be 5,000. Okay. 5,000 is the balance. Okay. But as per passbook, because it is not presented in the bank, you know, the fellow who has taken the check, it is his wish to present it anytime within 3 months. Okay. So he did not take the check to present it in the bank. As per passbook, it is same 10,000. That means it will be more. Cash book balance shows, cash book, the bank column of cash book shows 5,000 because it is reduced by 5,000 as soon as the check is issued. But the same check did not go to the bank. When it did not go to the bank, banker will not reduce it. The banker will keep it as it is. When he keeps it as it is, the passbook balance is more. The passbook balance shows more. It shows 10,000, whereas as per cash book, it is only 5,000. 5,000. Checks issued but not presented. Checks issued but not presented. Is it clear? Is it clear?
Yes, sir.
Okay. Next. Similarly, can you continue, Ma?
Yes, sir. Checks deposited but not credited by the bank. The business entity may receive checks or draft which is deposited into the bank for collecting the payment. Again, entry in cash book will be instant, thereby increasing the balance. Here, bank balance as per cash book will be more than the balance as per passbook, bank passbook. This is also called as outstanding checks.
Look at this. As soon as you receive a check from anybody, okay, you sold goods and you got check for those sales. And as soon as you receive that check, you just record it in the cash book and send it to the bank. As soon as you record in the cash book, bank column, cash book, bank column, what do? What happens? Let's say you received a check of 10,000. Your existing balance is 10,000. When you received a check and sending it to the bank, immediately you will record in the cash book. Just as you're sending the check to the bank, you will receive as if you will record it as if the amount is received. The 10 will become 20,000 as per bank balance, as per cash book. But as per passbook, the balance as per passbook is not 20,000, it is still 10,000. Why? The check is received by the banker. The banker, as soon as he receives, he will not credit it. He will not record that amount, just as you recorded. The banker will record only when he gets the money on that check. So let us say if this bank is HDFC and a check that the HDFC bank received is SBI check. So this fellow, HDFC fellow, wherein you have the account, sends this check to SBI, and SBI, after verifying credentials on the check and the balance, he will give that amount of 10,000 to HDFC bank, maybe through net transfer or whatever. Okay, these days it is only net transfer. In olden days, the liquid cash used to be carried. Okay, now it is net transfer. So he gives the 10,000 to HDFC. To this process takes nearly 3 days. Okay, for 3 days, the balance is still 10,000 as per passbook. But as per cash book, it is already 20,000. After 3 days only, the passbook balance will become 20,000. Once the amount comes, you will make it 20,000. Sometimes the check may be bounced. There is no balance in SBI account and the check is returned unpaid. The balance as per passbook in that case also will be 10,000, whereas the balance as per cash book is 20,000. So this is one more reason. Checks deposited but not collected. This is called checks deposited but not collected. Checks deposited but not collected. You have deposited the check. As soon as you deposited the check, the cashier increases the amount. Whereas the banker, because the amount is not collected, he will not increase. So therefore, as per bank, the balance is less. As per firm or individual or the cashier of the company, the balance is more. Clear?
Yes, sir.
Next, we'll take,
Errors.
yeah, we'll take
Okay,
somebody.
sir. Okay, sir.
Aditya. Okay. We'll take somebody else. Jan, we will take.
Yes, sir.
Go ahead, Ma.
Errors. The bank may, sorry.
The bank may by mistake.
Yes, sir. The bank may by mistake miss out entering the debit or credit, which results in the difference.
Yeah. There may be errors by mistake, sometimes, sometimes I get a huge amount of credit. Okay. Sometimes huge amount of debit. Okay. So sometimes the errors may take place. Once what happened in my bank account, nearly 80,000 credited. 80,000 credited, maybe 10 years back, 80,000 rupees amount was credited. Actually, I was in dire need of money. There was no salary credit. Suddenly this amount is credited. And I was thinking why this amount is coming, where this amount is coming, I didn't know. So as I'm drawing, the amount is coming, though there is no balance in the account. Okay. So yeah, this kind of errors may take place. And of course, once I deposited the money, they have retrieved the entire amount. They took back the amount. Okay, that's different. But such mistakes may take place. If such mistakes take place, okay, there may be difference in the passbook and cash book. Let's say if they charge by mistake any expenses, as per your passbook, the amount is less, reduced, but that is not reflected in your cash book. Or sometimes there may be some deposit by mistake, others deposit is accounted in your account, recorded in your account. So in that case, what happens? Your amount is shown more as per passbook, but there's no difference there's no change in the cash book. So this is the reason. The errors could be reasons for differences in cash book and passbook. Fine. Next, outstanding instructions. Go ahead, Janvi.
Yes, sir. Standing instructions. The entity may give standing instructions to the bank for certain regular payments like loan payment installment, transfer of funds, etc. This may get entered into the cash book immediately, but passbook entry may be delayed.
Yeah. When you're giving standing instructions, right? You, for all your bill payments, mostly credit card bills, okay, the, electricity bills, for most of your bills, we give standing instructions, okay? We give the bank an instruction that you can pay whenever these companies come and ask you for bills on my behalf, you can pay them. So that's the instruction given. That's called standing instruction. And generally, you can see this standing instruction in case of car loan EMI payment. When you are giving a form in the beginning of taking a loan, that form itself is a standing instruction. And every month you need not tell the banker, okay, to pay them money. The first form that you fill instructs the banker for all your future and successive payments to the loan provider. Okay, that's standing instruction. So in that case, what happens? The cash book balance shows more, but the passbook will not be changing. It is same or it is more. It is same means it is more. Okay, it's not reduced means it is more than the cash book. It is same. Okay, till the amount is reduced. Till the amount is reduced. Okay, clear? Next. I want others to take up. Anybody? Malik Khan or Likita?
Yes, sir. Which one, sir?
Yeah, B.
Items not appearing in the cash book. Bank interest, bank charges, etc. The bank will charge interest on overdraft or also charges for services, issue of demand draft, pay orders, etc. Here, being the source of transaction, the bank will record in the passbook immediately and send the debit advice slips to the business entity. The entry in the cash book may be delayed. Similarly, the bank could credit interest on fixed deposits, which may get entered in business books at a later date.
Look at this one. Whenever there's a charge by the bank, it will be reduced in the passbook. But the same is not communicated, or to communicate it takes time. Till that communication reaches the cashier of the company and the cashier enters that, it is difference. There's a difference. It shows difference. There's a difference between passbook and cash book. Similarly, the bank may credit the interest. Let's say you have 10 lakhs in the account, and on that the bank may pay interest. For that interest payment is not known to the cashier. When it is not known to the cashier, he doesn't record. So as per the passbook, the balance is more. As per the cash, the balance is less. Okay, right. Next, direct deposits into the bank. One of your customers, okay, read it, Malik.
Direct deposits in the bank account. Sometimes customers or others may directly deposit an amount in the bank for goods or services rendered. The bank will enter it immediately, but entry in the cash book will appear later.
Yeah, look at this. I have participated in one of the panel discussions. Then I gave my account and I forgot. Okay, and after 3 months or 4 months, I didn't know. Okay, that there is a amount check. There's a check for that a particular amount came and deposited. Okay, they have deposited amount without my knowledge. I don't even know when they have deposited, and that particular phone number I don't carry. Okay, so that is already deposited. Now there's a mobile phone number. Immediately the alert comes as soon as the amount is deposited. But generally, if this is not there, if this phone number system, message system is not there in the olden days, what happens is The amount of interest is credited in your account as per passbook, but the same is not known to the, the amount of sales, the person who received the goods directly deposits money in your account, but the same is not known to you till the banker communicates that to you. Okay. So as per you, the amount is 10,000, but there is a sale amount deposited by your customer. It is 15,000 as per passbook, but as per cash book, it is only 10,000 because that is still to be received, that communication. Okay, that's direct deposit in the bank. And sometimes you may render service and that amount also is directly deposited. Okay, directly deposited. And you don't know that. Until that communication comes to you, you don't record that. Because you're not recording, your cash book balance is less compared to your passbook. Next, bills for collection. Go ahead.
Bills for collection. The business entity may send bills of exchange for collection. The bank will collect the payment and credit the same in the passbook. The entry in cash book will be made only after receipt of information from the bank.
Yeah, bills of exchange. You know what is bill of exchange? Have you ever heard of this bill of exchange? Bills for collection. You know, when you're selling goods and the amount is not paid immediately, a slip is written or a paper is written, okay, on which the amount due from the customer is written and the signature of the customer is taken. And when he is intending to pay also will be mentioned, that is maturity date. So on that day, he will be paying this money. Now, what the company can do is, this bill can be discounted with the banker. To discount with the banker, maybe with 10% or 20%, depending on the agreement, or 5%, he will send that amount to the bank. The banker, you know, reducing the 10%, he will first collect the money from the customer after three months, if the duration is 3 months. But when he is discounting, immediately he will discount it, okay, and pay, right? So now look at this. The business entity may send bills of exchange for collection. Yes, it is sent. The bank will collect the payment and credit the same in the passbook. Save in the passbook. The entry in the cash book will be made only after the receipt of the information. Okay. Look at this one. The bill is sent. The bill is not money. The bill is not a check. Therefore, the cashier doesn't record. The bill is sent for collection and the banker on your behalf collects. Okay. When he collects, maybe 10 days or 1 month, whatever is the time, only when he collects, he will record in the passbook. But the cashier will not record until the amount is collected, until the same amount collected is communicated. The amount collected, the information of that fact has to be communicated to the cashier. As long as it is not conveyed, he doesn't record. So therefore, let's say the amount is 5,000. As per cash book, the amount is 10,000, but as per passbook, the amount becomes 15,000 because the amount is already collected. And that collected information, the fact of amount collected, the information about amount collected is not passed on to the cashier. Till it is not passed on, the amount as per cash book is 10,000 and amount as per passbook is 15,000. But once it is communicated, it is rectified. Okay, it is rectified, right? Okay, next, errors. The records may be missed out by the bookkeeper of the business entity. Okay, if you know, let's say some checks or some bills, they're misplaced. They're misplaced. When they're misplaced, then you will not find the same balance in cash book and passbook. There will be differences in cash book and passbook. So these are the two major reasons for the cash book and passbook not to agree. Cash book and passbook not to agree. What are the reasons for passbook and cash book not to agree? This is a 10 marks question for Osmania University exam. And this is also an interview question. Okay. There may be some interview questions in this. but this is a 10 marks essay. Discuss the reasons between cash book and passbook. This can be asked this way. What are the reasons between differences? What are the reasons for differences between cash book and passbook? It can be asked this way. Okay, so in any way it may be asked, the answer is same. The answer is same. Okay, so these are the major reasons for passbook and cash book not to match. They are different. Because they are different, you need to reconcile them. You need to reconcile them. Let's say Malik and Jeevan, or Malik and Jagdish are not in good terms. When they're not in good terms, okay, what I had to do as a teacher, or let's say somebody like Ayub will be reconciling, or me or Rohit will be reconciling. Any of us, whoever is reconciling, what do? We take the opinion of Malik. Malik, why are you not talking to him? Okay, why are you not talking to, who is this? Why are you not talking to Malik? Jagdish. Why are you not talking to Jagdish? Then he says, Jeevan. Why are you not talking to Jeevan? And he gives a list. That fellow did this, that fellow did this, that fellow did this, did this. 4 reasons he gave. I go to Jeevan. Jeevan, what happened? Malik is not happy with you. And Malik gives reason 1, that fellow misunderstood me in this matter. Reason 2, that fellow misunderstood me in this matter. So that fellow cheated me in this matter. That fellow did this. He gives 1, 2, 3, 4. Okay, but actually these two are good friends, Malik and Jeevan. But because of the misunderstanding, okay, they're not in good terms. They're not talking to each other, even if they come face to face. So what I do as a mediator, as an arbitrator, I'll try to take both the opinions, try to reconcile them. Actually, Jeevan, Malik, actually you understood, in a particular point about Jeevan this way, but actually his intention is not that. He wanted to convey something and you understood in a different way. Okay, so that's the reason. And one by one, I go on settling things, and finally I will make them friends again. This is what reconciliation. Now this is what we had to do between cash book and passbook. There are differences, okay, due to these reasons, due to these many reasons. There are 4 reasons in the first category, and there are, okay, 4 reasons in the second category. Due to 8 reasons, these 2 books are not matching. One book shows more balance, another book shows less balance. They are not matching. So what I had to do, I had to reconcile both the books. Okay, and a statement to reconcile these 2 books is known as bank reconciliation statement. Okay, and what's the need for preparing bank reconciliation statement? You can read, I think Likita will read it, all 4 points.
Yes, sir. Need for bank reconciliation statement. It helps to understand the actual bank balance. It helps to identify the mistakes in the cash book and passbook. It helps to detect and prevent frauds and errors in the recording of bank transactions. It helps to incorporate certain expenditures or income debited or credited by bank in the books of accounts.
Good. So this is the need to prepare BRS. It helps to understand what exactly is the balance. It helps to identify the mistakes in cash or passbook. It helps to detect fraud. It helps to incorporate any changes in expenditure. Okay, any changes in the expenditure. Look at this. The 4th point. When it is a credit card, oh my! If the credit card is handed over to you, what will you do? Okay, you go on swiping. That's it. And when the statement comes, then you will know how much you have spent. All right? Whatever comes to your site in the shopping mall, you go on, swipe it. That's it. Swipe it till the balance is exhausted. But when the statement comes, there's a huge amount that you have spent. Okay. So such things can be unearthed, okay, when you're reconciling. Okay. Now, methods of preparation of bank reconciliation statement. All right. Rules of addition and subtraction is one, and there's debit and credit method. Okay. Popular one is addition and subtraction. Okay. This will go by this method. Okay. We'll go by this method. All right. Yes.
I want to just ask a question, sir. At the starting of the document, it's in the beginning, sir.